So today I'm joined by Stevenson-Yang, who publishes China Primary Insight. Anne, thanks for joining us on Zer0es TV.
Well, thanks for having me.
There's a lot going on in the global economy today, geopolitical conflicts, but I want to get your insights on China specifically. We hear the debate here in the US between inflation, deflation, stagflation. What's your economic outlook for China?
Yeah, it's interesting because here in the U.S. we see inflation just keeping up ad infinitum, right? But China has the opposite effect. So it has both a demand shock and a supply shock coming. And the demand shock is that COVID is a whole lot worse than you think it is. They've started to report COVID now, but I took a look at city level statistics on transportation and gasoline use and things that show you that people are moving around the country. And there are certain cities, like 10 cities, a couple of provinces, where the numbers just went through the floor. And most of those places were places where they later reported COVID. So it's very clear that they had a COVID problem, but that they were hiding. So I think now it will have gotten out of control, and that's a real depressant to demand. They've reported 2 deaths now this week, in the first 2 in 14 months. That's clearly not true, right? And China has a very low vaccination rate among the elderly. And also for reasons that I don't understand, it has a lot of vaccine reluctance among people who have underlying conditions of some sort or who have had some kind of illness. And so the death rate really should be higher. So, and they've only reported, they reported an additional, I think, 28,000 cases in March. But it's clearly 10 times that. Anyway, that's why I started to look at other city level and provincial level statistics to try to find out, can you see cities diverging in the way they act economically? So it becomes pretty clear when you see taxi rides dropping 50% in a locality, even compared with 2020, right? Then there's something wrong. Same with bus rides, same with gasoline use, same with airplane takeoff and arrival, same with deliveries and logistics. All these data sets show very clearly that you'll have an increase in Beijing and a sharp decrease in let's say, Hefei or Ningbo, which are cities that have not been reported as COVID centers. So why did they drop so much? I think the issue is that they do have COVID.
Well, on that topic of vaccines, do you think part of it is weaker or less effective vaccines over in China? Do they have the same access to some of the ones available here in the US and Europe? And could that contribute to, I know you mentioned the hesitancy of the vaccines, or is it just a general skepticism around them overall?
I think there are 2 issues with China. One is the vaccine strategy and the other is the lockdown strategy. So the vaccine strategy clearly has not worked well. And largely that's just pig-headedness, right? Because their own company, Fosun, was going to produce the Pfizer vaccine for China. They could have had just as much economic value from it, but they just wanted to use their own vaccine, and their own vaccine, not being an mRNA vaccine, just wasn't as effective. So that's a problem. And they may fix that problem now. They're importing some Pfizer vaccines, but it's not totally clear. So the second issue is the lockdown strategy. So the lockdown strategy clearly has been helpful in keeping the spread at bay. The problem is it really, really hits the economy. The secondary problem is that people get really anxious about it. So they don't want to be locked down. They're tired of being stuck in a hotel room or at home or in an isolation facility. And so there was this recent YouTube that went online that was really cool, from the Guangzhou beauty exhibition or something, where it was announced that one person had COVID. So there was a stampede of thousands of people. People might actually have gotten crushed, to get out of there, not because they were really afraid of getting COVID, they're all vaccinated, right? But because they're afraid that they're going to be close contacts with that person and be locked down for the next 3 weeks, nobody wants that. So that's you get into this situation where people avoid reporting, and that's a little bit dangerous. But I think the real problem has been with the vaccine strategy.
Okay, so it sounds like there's a potential deflationary force from the demand side due to COVID, speaking more so for the energy space. You also have the potential supply shock as well from the energy space. But during this whole Russia-Ukraine conflict, how could that potentially impact China and their food security?
Yeah, so I think that that's really, really marginal. Right now, China gets quite a small amount of its wheat, its pigs, and a couple of other things, some minerals, oil, about 1.6 million barrels a day. It gets those things from Russia. So, even if you were to increase those things by 50%, and you're not going to because you don't have the transportation capacity or the will or, a whole lot of reasons, then it's not going to make a huge dent. I think that on the negative side of the balance, by casting its lot with Russia and painting itself as an opponent to NATO, China has actually undone 20 years of work that they did to try to sort of play with the big boys, right?
Well, I want to come back to the Russia-Ukraine conflict in a little bit, but it sounds like the economic forces that are playing out are already unfolding in the Chinese equity markets. Not as much here in the U.S., but the counter, I think, to the demand side due to the COVID lockdowns might be that China's begun to increase its fiscal and monetary stimulus. I know I've seen a couple of reports out there of the Chinese credit impulse. In your opinion, will that have an impact to kind of stave off this deflationary force, or will it not really do much?
No, I don't think it'll do much. I mean, first of all, the government has a really strong political commitment publicly to the banks not to do that. So it's very difficult for them to do it sort of publicly and say, oh, we were wrong, we're going to pour, trillions into the economy. But I think the more important reason is they really don't understand the degree to which they would have to stimulate in order to bring it back to 2017 levels. Because you have for example, the property market in sharp decline. It's 10% down in new starts and 12% down in completions. That's historic. It doesn't sound like that much, but it's historic. 12% down in completions means that developers don't have confidence that people are out there to buy their apartments, so they're waiting to complete stuff, right? And also you see a corresponding decline in appliances, refrigerators, air conditioners, washing machines. None of these things are moving through the channels. So that means that developers have a very negative view of the market. Well, they got to sell, right? I mean, you can stimulate, you can give them loans, but fundamentally you have to sell the inventory that's sitting on your balance sheet as a current asset. And if you don't, then you're really in trouble. And there just isn't enough money that's going to go into the channels to save those guys.
That's potentially another major downward pressure on demand. Pivoting back to the Russia-Ukraine conflict, I think some of the people out there believe that China will be tactical in sort of the Russia sanctions, and they'll take advantage of some discounted commodity prices. Do you see that happening? Have you done any sort of channel checks to find out, will China take full advantage of that?
Yeah, the problem is that it's just not tremendously significant. So I think the proper comparison is what China did after the 2012 sanctions on Iran by the US. And they did get a discount and they did import more Iranian oil, but it's marginal. I mean, we're talking like $5 off a barrel of $120 oil, right? Plus some discount to the transportation. So it's not going to be a huge thing. And you have to consider the transport constraints because you have a pipeline that comes from Russia and that only has capacity for so much. Then you have tankers which are running into all sorts of problems because of the sanctions. You really can't increase those things by more than, 10% or something like that. So yeah, they'll try to take advantage, but this is the fundamental problem with China. They don't have the capacity to make strong strategic decisions. I know people have a different idea of China, but the real fact is that when it comes to anything besides Communist Party stability and ability to continue ruling the country, they're just a mess. They can't really make decisions. So they do a little of this, a little of that, get a little bit of a discount on oil, and kind of, make a lot of noise about supporting Russia, but don't really pursue their interest.
Sticking with that line of thought, in terms of taking advantage, I have read a few reports that mention that China might be willing to purchase oil from Russia, but it has to be settled in renminbi. I know there's an example out there, as you mentioned, with Iran. What are the difficulties that you're seeing with that potential payment system?
So that really splits the state-owned folks from the private folks. So the private folks are just not going to touch that for the most part, because they go to their bank and their bank says, well, I need a letter of credit and I need it in dollars. If you can't give me a letter of credit in dollars, I can't do it. So, there is one Russian oil company that said that they can do business without a letter of credit, but that's pretty risky because you have a lot of refiners in China, particularly along the coast, Shandong, that have been going bust. And so to import oil without a letter of credit behind it, that's pretty risky. So then you have the state folks. So the state folks can make some bilateral deals. They can settle in renminbi. They can figure out how the Russian side can buy stuff from China in order to balance it out, but it's not going to be 100%.
Interesting. So what you're saying is, even though they might settle the trade if this goes through in renminbi, it's not really getting them funds because it sort of stays trapped inside of China and they have to just purchase Chinese
Exactly.
goods.
What you have to remember about renminbi is that fundamentally it's barter, right? So because you can't, take a renminbi down the street to the deli, you're going to be able to use it? No. Can you bring it to Bank of America and say, swap it for $1? No. So what you have to do, if somebody's going to receive renminbi for a shipment, then they have to use it for something. So, on a state-to-state basis, yeah, you can do that, but you can't, not everybody can do it, and private companies certainly are not willing to.
So it sounds like you're not really buying into the SIP system replacing SWIFT and the US dollar as the reserve currency. Is that correct?
Oh, for sure. I mean, look, the fundamental issue about having a currency that works internationally is it has to be available. You have to be able to go to the bank and buy it. You have to have it, right? So if China is not willing to run a deficit and not willing to make its currency convertible, people don't have renminbi. So how are they going to make it a world currency? So right now it's 2% of international banks' reserves, right? It's about, I forget, like 2% of international transactions. This is not, and this is after long, hard effort by the Chinese government. It's just not going to happen.
So speaking of the strategic efforts that China has made, I know you mentioned trying to bolster their stance on the international scale. What are the risks in China doing business with Russia? I mean, could they theoretically be sanctioned like the Chinese bank was in dealing with Iran in the past? What are some of the potential ramifications for their involvement in this?
Well, I think that's the short-term, near-term concern for companies. Private companies are thinking, well, if I buy Russian oil, suppose my account on LME gets frozen, right? Because I touch the international world in all sorts of different ways, and I'm not willing to risk that just to do an order from Russia at 10% discount. So that's the short-term concern. The longer-term concern is, you don't want to be throwing in your lot with dictators, right? You're trying to show that you're part of the international trading system. You want to have a voice at the WTO, at the UN, all of these things. And then all of a sudden you've bought this Russian argument, which doesn't really seem to have any basis, that like, oh, well, NATO is threatening China. Well, what has NATO got to do with China? Right? And yet you're selling this to your people, you're suppressing any information to the contrary. Everybody's all like, oh yeah, China and Russia are allies. Well, it doesn't, it's not long-term good for them. And I think that, what's got to be in their mind is, how long does Putin last?
Yeah, I think it's a really good point, because I do remember reading in one of your reports that The big question is, how long do these various parties have in terms of political staying power? And one of the really fascinating points that you made was that China had spent the last 30 or so years convincing its citizens that Russia really wasn't, say, a good partner. Is that going to make it extremely difficult for them to try to pivot and say we want to now partner with Russia or support Russia? Does that jeopardize the Chinese leadership at all?
Well, I mean, there are plenty of older people who really don't trust Russia. There was the 1960 break between the two countries where Russia really screwed over China. People can still bicycle through Beijing, or I suppose now they drive through Beijing and Shanghai and see the buildings that Russia built, and then the engineers just left in the middle of building them. So there's a lot of that resentment, but I think it's more like, what is the idea here? Because back in the 1950s, late 1940s, 1960s, China and Russia were both putting forward this idea that they're champions of the workers of the world, right? Mm-hmm. And there was a certain appeal to that. Now, what is it? Both of them just abandoned communism, right? Under Deng Xiaoping, China was like, yeah, whatever works, as long as you're allowed to get rich, and let's just do whatever works to get. And it worked very well for China. Russia as well has become nothing but a kleptocracy. So how are you going to persuade people that there's a moral argument here?
Yeah. Now, just to pivot really quickly, you did bring up the LME and the trading situation and potentially having your account sanctioned. We've most of us had heard about the situation in the nickel market. Prices being locked limit up. A major Chinese player is suffering a short squeeze. But in your opinion, I mean, are some of these commodity prices being artificially inflated? I mean, we're looking at all the different commodities around the world: nickel, copper. Even gold and silver are up there along with energy prices. So, is there sort of this false narrative behind this supply shock and demand surge, or is it more technical factors like the situation with the LME?
Well, I don't know. What I think is that number one, it's uncertainty always drives prices up, right? So Russia is about to invade Ukraine. Russia does invade Ukraine, and everybody's like, I don't know what that's going to do to supply. I better, drive prices up. So it's the geopolitical uncertainty, but it's also the technical factors of the amount of cash in the market and people exiting the equities markets and things like that. With the particular issue of nickel and the Qingshan short squeeze, I just have to say, this may be a little conspiratorial, but I just have to say LME is owned by the Hong Kong Exchange now. You have to feel that there's a little bit of like, oh, I'll take care of you if you take care of me sort of thing going on, mm-hmm. where, not making the mammoth Chinese player pay up for his mistaken shorts. Right. Who knows? Anyway, nickel's down to 28,000 now. It was at 25,000 in December. It's kind of close.
And sticking with sort of the metals, I know that China is Russia's biggest trading partner for precious and semi-precious metals. And I think behind that, along with coal, comes Australia and Indonesia. So through all of this, I mean, do you see a potential opportunity for assets over in Australia and Indonesia, or do you really see the deflationary forces coming from China as sort of not really creating any true major winners out of this situation?
I edge more toward the latter. The key commodity here is nickel, because it's a particularly high grade sort of nickel that Russia supplies to China. China's biggest player, Qingshan, has a huge mine in Indonesia, but they get mostly nickel pig iron, which they use to make what do you call that? For silverware and stuff like that. That's like 85% of the total, but there is that marginal bit which is used for electric car batteries that's really important, that comes from Russia. However, I have the experience of mineral sands back in 2011, 2012, where the price spun out of control, and China didn't want to pay the Australians anymore. Well, everybody thought, oh, well, the tile industry is going to crash and is going to be terrible and Australia has a chokehold on them. Well, everybody figured out a way to substitute really quickly. And that's happened with a lot of the rare earths too. So in the end, I think that I have a lot of faith in the capacity of companies like 3M and Fujitsu and so forth to find substitutes.
And if we could just touch base back on something you brought up earlier, I think it's kind of interesting to see that a lot of the more sort of regulatory crackdown in China, it certainly doesn't sound like from a fundamental economic perspective you see much of a rebound in the cards. But what do you see from the political and regulatory aspect? Could we see any sort of relief on the major tech companies? I just saw that Baba announced an increased buyback. Is that going to do anything for the Chinese tech sector, or is this sort of regulatory crackdown, here to stay, if you will?
Yeah, it's an interesting thing because after all of these years of people like me yelling about how corrupt the market is, it really isn't corruption that has brought them down. It's the regulatory sort of, you could say crackdown, or you could say confusion, lack of dependability. I don't really think that that's going anywhere for a couple of reasons. The main reason is technical. Money is just gonna leave China and seek security. That's just the way it is. And if I'm right about deflation coming out of China, then those U.S. Treasuries are, with their 2% yield over 10 years are gonna start looking really good, believe it or not. But also I think that it's really important to the Chinese that private companies not have the sort of power that they were starting to get. And private companies and tech companies are almost synonymous. At least listed tech companies are. So that's the source of the crackdown. It's not really about, tech or the market or, personal data or anything like that. It's that they don't want private companies holding personal power for the executives and access to hard assets like US dollars. So I don't think that's going anywhere. It is amazing that Liu He could make one little announcement and the index goes 40%, but that's when you're down in dollar stock territory. And as for Alibaba doing a buyback, I mean, it's what, it's $78 now, and it IPO'd at 94? Yeah, it's been to 250 or something. Mm-hmm. A buyback's not doing all that much for it.
And how does that tie into the ADR situation here in the US? I mean, obviously there's governance concerns. What is your view around that? Is China going to be willing to adopt sort of these governance practices to maintain the listings? Or is the US really going to take a hard line, and do you see sort of a mass delisting in the years to come?
I think that this trend away from China, the movement of portfolio money back to the developed markets, really helps the resolve of US regulators and Congress. So in the bill, for example, that would delist the companies that refuse to use a PCAOB audited auditor, there was a lot of kind of squish built into that bill with 3-year phase-in and all these things. And I originally thought that the US was going to kind of find a way to accommodate, and China would find a way to claim that it's making the audit records available, as it's doing now. It's like, oh, well, if the CSRC approves the audit records, then maybe we'll give them to you, like that. But I think that as the share prices decline, U.S. investors are going to be very concerned about whether they can get access to their dollars that are sitting in China, right? Mm-hmm. And with the example of Russia, that's not looking good. So I think that there's more money coming out of China, and that's going to strengthen the resolve of people like Marco Rubio.
I know you mentioned the Treasury's potentially looking really attractive in the event of this deflation, if you're correct on this call. Are there any sort of other things that you'd be keeping an eye on? Would you be focused on the U.S. dollar with the idea that the renminbi could be devalued? What other things are you sort of thinking about in terms, for investors?
I'm a micro person. I'm not the best person to ask about that, but I do think it's time to get out of the equity markets and start to look at the bond markets. Start to look at currencies, start to look at more safe haven investments.
That really is fascinating to me because I've seen a couple of the recent Bank of America reports, and everyone is, it seems, still piled into the mid-cyclical reflation trade of the banks and the commodities and energy. But it sounds like once a lot of this uncertainty sort of dissipates from the Russia-Ukraine situation, that the deflationary forces should come back and potentially impact a lot of that equity market positioning.
Yeah, it's a curious balance because we do have supply chain constrictions that are coming out of both Russia and China. And we still have the oil issue. Exactly what drives the oil pricing is a little bit hard to say, but oil pricing is not going below 90 for sure over the next year. So exactly how these two things balance is a little bit hard to say, but yeah, I'm putting my bets on deflation.
So speaking of the supply chain issues out of China, do you see any chance that strong demand in the US could potentially push back on these deflationary forces from China? I know there's the export in renminbi, and if that gets devalued, that's a deflationary force. But as we saw coming out of the pandemic, the extremely strong demand out of the US sort of bolstered a lot of these inflationary forces and supply bottlenecks. Could that continue, or do you think that's going to wane in the months or quarters ahead?
Yeah, the key issue is semiconductors and semiconductors for autos. So where are you going to get those things? A lot of the fabs are closed down now. Taiwan, which makes, of course, the higher end semiconductors, is not. But that is the concern around China. That's where, and electronics products, but I think semiconductors are the key input to supply chains. But a lot of companies are looking for how to distribute their supply chains to different places besides China. They're considering that they've racked up too much risk there. So I do think it's temporary.
And that could partially contribute to, I know I've read quite a bit about this idea of deglobalization or the reshoring of manufacturing. You mentioned Taiwan. I think Taiwan Semiconductor is building a plant here in the US. I believe Intel's building another plant. So, are a lot of these things going to play out in terms of the deflationary forces in the next couple of months, do you believe? Or is this more sort of, as supply gets built in the next 18 months to 2 years, it could potentially take that long for things to go back to normal?
Yeah, I guess the latter. I mean, it is a very, consider that it took 20 years for the supply chain to fragment and globalize. The one strength that we have now is that IT is really strong. And so it is possible to have software made here and a key part made there. And, look at the Apple supply chain, for example. But can you move it all of a sudden? No. And China has one huge advantage. It's not labor, it's cheap capital, which has made these massive manufacturing facilities more efficient to put there. So aluminum, steel, I mean, those are very much based within China where the market is, but petroleum, ethylene crackers, these huge facilities that the U.S. doesn't want to have.
Do you see any of these things playing out any differently for the rest of the world? I mean, do you have any strong opinions on how the China situation or Russia-Ukraine situation may impact the rest of Europe, or earlier we brought up Indonesia and Australia? Do you see anything specific that catches your eye that could be particularly hit by either one of these things unfolding?
Well, I mean, it does kind of give the lie to the long-term German strategy of, be chummy with Russia economically so that you can, so that you can stave off risk and, make them a good partner and all that. And now Germany finds itself being too dependent on Russian gas. So, that's going to change. And that's an interesting shift. I just see Russia becoming more and more isolated.
All right, Anne. Well, it was great having you here today on Zer0es TV. I think you make a really compelling case for the potential deflationary forces as we move forward, which, to be honest, is not something I'm hearing a lot from around other areas of the market. Certainly, it doesn't seem the market is behaving that way. So, if your forecasts are right, and it certainly is a compelling case, then it does seem to be some major shifts coming in the months and quarters ahead. So, thank you again for coming on Zer0es TV. It's been great speaking with you.
Well, thanks for having me. Nice to talk to you.